We got a new report from TD Ameritrade saying in August, clients were net buyers of equities for the first time in 3 months, but moving away from some of the big tech names. Kinahan joins us now to discuss. He's Chief Market Strategist at TD Ameritrade, and here on set at Post 9. JJ, talk to us about this latest report. Why the change in sentiment?
Yeah, I think it's really interesting that in August, I think there were two main, talking about tech. Amazon selling off 8%. It was a stock that our clients absolutely piled into. As you know, their number 2 buy, and Disney was the number 1 buy of the month. So those two, Disney the first 2 weeks of the month, Amazon the rest of the month, Microsoft, those 3 names really drove things. I think it's interesting you just brought up Netflix, because our millennial clients, Netflix was one of their top 5 sales. So it's just kind of interesting, Disney being a number 1, Amazon in the video space, certainly not their primary business, but then Netflix being a sale, I think it's all playing into the last story you just had.
Stepping back from the individual names, top line, investors fearful or piling in?
Top line, investors continue to invest in short-term interest rate products. Consider, I guess, the safer products, 6 months and less. So that when things do happen
in the fixed income market.
Yeah, in the fixed income, yeah. Or even CDs or things like that.
Yeah.
So that they can, when there is a sell-off, quickly move their money into buying equities. And I think that's been the most interesting trend of the last 3 months, to be honest with you. Usually, Wilfred, when we see fixed income products, tends to be longer duration. They've cut the duration significantly as volatility has come the last few months.
Has there been a sense that technology is still an overweight for retail?
Yeah, overall, Apple was the number 1 sell for the 3rd month in a row. But Apple still remains our number 1 held stock. So, I want to be careful, people are, oh my God, they're just piling out of Apple. No, but I think it's interesting to me when I watch the behavior of our clients. You get above 205 in Apple, and retail clients are suddenly taking profits because many of them have held it for so long.
Yeah.
And I think that's a stock, I'm sorry, Mark, that's a stock that reflects the fear about tariffs the most clearly for most people, in my opinion.
Is there a difference among retail investors between younger investors and older investors right now? Are millennials doing something different than others?
Yeah, well, marijuana stocks. Buy what you know. But
okay, well then.
No, but
I think that goes across generations.
Yeah, but quite honestly, I think when you look at marijuana stocks, and even Uber, I think people hear Uber like, oh my God, millennials are just buying marijuana and Uber. No, they actually tend to hold broad-based ETFs as their one holding. But the last few months, as Uber has sold off last month, they did buy it. As the marijuana stocks have sold off, they did buy it. Why? They have a great time frame, and if we ever do, if you say, 15, 20 years, depending what your obviously time frame is, but I find it hard to believe that you can't be of the opinion that some of these rules will go away. It could be a nationalized product. So again, if this is a longer term investment as part of your portfolio, it may make sense for people who are looking longer term.
All right. Well, JJ Kinahan, thanks for joining us.
Thanks,
Break down these latest results.